Hello investors, welcome back to the Trend Trader channel. In today's video, we're going to be discussing ETFs. The ETFs that we're going to be focusing on, they are tracking the global markets. And the ETFs that we'll be talking about are available to South African investors. But also it doesn't matter where you are in the world, you can still find the equivalent of these ETFs. The focus is that they're available to South Africans and they're available in rands. They're also available in local platforms such as EasyEquites, which a lot of retail investors are using. But in South Africa, there are also other financial institutions that have different platforms. So we are not just talking about ETFs that are available on EasyEquites. Before we proceed, I would like to ask those who haven't subscribed to please consider subscribing. And if you find value in this video, please make sure that you smash that like button. If you have any questions, comments or suggestions, please feel free to leave your comment. We respond to all the comments that we are getting. So to begin, some of you may already know, but for those that don't know yet, where can you find information regarding ETFs? My favorite place to go to is ETF SA. So as you see, it is said they call it the home of ETFs. And then under the ETFs tab, that is where you're going to find some of the ETFs that are available on this website. This does not necessarily represent all the ETFs that are available in South Africa, but just those that are available on this website. So there's a lot of information that you can find here. Again, you can see there are different ETF providers like OneVest ETF, 10 times ABSA, FNB, Satrix, and others. So the focus of today's ETFs are those ETFs that are tracking the world. We're not talking S&P 500, we're not talking JSE Top 40, but we are talking about those ETFs that are tracking the world, like the Sygnia MSCI World ETF. So another thing that you need to pay attention to, under these column headings, you can see there's a JSE ticker, there's a total expense ratio, which tells you how much money you can expect to pay the ETF provider, in this case OneVest. So this TR is applicable to OneVest, and for each and every provider they have a total expense, they have a different total expense ratio. And the reason of coming here is so that we can look at the fact sheet of that particular ETF, because that is where we are going to get additional information. So you need to make your own decision based on a number of factors, such as the total expense ratio or the ETF provider that you prefer, or ETF that is available on the platform that you are using. So now let us look at the OneVest ETF. We can see they have this that tracks the MSCI World Index with its own total expense ratio. So we're not gonna give you information in terms of all the total expense ratio, but just pay attention to it whenever we are looking at that particular ETF. Again, we see that 10 times they also have a total world ETF. They call it the global all cap ETF. Again, it has a different total expense ratio. And then now we're also going to be looking, so I'm just gonna scroll down and find all those ETFs that tracks the global markets. So for those issuers or ETF providers that don't have, we're just going to skip those. We see that not ESG, we don't want to talk about ESG, we want to talk about the MSCI World. Satrix also has the ETF, and then there is Sygnia, which is the last company. So now again, like I said, we're not going to be talking about all the total expense ratio. The things that we want to focus on is whether the ETF does make distributions, and if in terms of the holdings, how that the holdings are spread either in terms of global location or in terms of how it is diversified in terms of sectors. I think all of them, they share the similar risk level, and also the time that the ETF provider sort of recommend the holding period. As we can see in terms of Sygnia, they are recommending that it's something that you should consider for at least 5 years. You should be invested for at least 5 years. So none of this information that we share with you constitute financial advice. It's a decision that you'll have to make for yourself. So to begin, let's start with MSCI World Feeder in ETF. That is coming from OneVest. One thing that you should note in most instances, if an ETF is called a feeder, even if it's not an ETF like a unit trust, they call it a feeder fund. It means that there is an underlying fund that that particular product is tracking. So you can see in this case they are talking about that there is an underlying fund that track the MSCI World Index, right? So now it's not that OneVest will buy directly individual holdings in those particular countries, but they will buy this iShare Core MSCI ETF. So this is the underlying fund that iShare Core MSCI. And then there are some things that you need to pay attention to. So now when we talk about a world ETF, remember there is developed world, and then there is emerging market or emerging world, developing world. So you will see from time to time most of these ETFs, they are tilted more towards the developed world, right, or the developed countries. And then again, they talk about the risk in terms of the OneVest. It's aggressive. They recommend 5 years. And then the information is similar for all these ETFs, especially the information that is just general. It's for investors that seek broad global equities exposure outside of South Africa, but using the South African currency, right? So you are seeking a global equity exposure without forex exchange tax clearance. Another thing that we want to mention is that if you buy these ETFs on a tax-free savings account, it means that you won't be paying a dividend withholding tax. However, if you buy it in any other account that is not tax-free, you will be paying a dividend withholding tax if that ETF does distribute, right? So in terms of low cost, that again boils down to the total expense ratio, because we saw that it varies. In this case, the TER, or the total expense ratio of this particular ETF, is 0.4%. So it's up to you if you consider 0.4% to be low cost or not. Okay. And then you can also blend with other investment strategies. We also remember that there's JSE Top 40. There are ETFs that track the property sector, the financial sector, the resources sector. There is also ESG. There are balanced funds, different kinds of funds. So before you choose a certain product, you need to understand what it is that you want to achieve with that particular investment product. And then lastly, with every investment, you always talk about a long-term view. It is just something depending on your age, obviously. So if you are still younger, you have a lot of time to invest in the stock market, and maybe then you can you can afford to take aggressive risk there in terms of your investment, but it is something that you need to speak to your financial advisor about, or a decision that you need to make for yourself. One thing that is worth mentioning with this OneVest ETF, because it is a feeder fund, the underlying fund does not distribute. Therefore, this particular ETF does not distribute, right? So you cannot expect to receive distributions. Some people, most of us will consider distributions as form of dividends, so you won't be receiving dividends from this particular ETF. And then in terms of allocation, remember the underlying fund is the iShare MSCI World ETF, so they invest basically all the cash is invested in this particular security. And then also you can see where the money is being held, and also how it distributes across countries where the money is invested in terms of the different countries. So we spoke about developed and developing countries. We can say about 70% of the fund is in the US, but also Japan, UK, France, or most of the European countries are considered to be developed countries. You can see they say there's others, about 17 companies that fall under others. So we don't know what's in there, but majority of the holdings, like about 94% of the holdings, is in developed countries. And then if you look at the holdings, remember about 70% is in the US. You can see the top 10 holdings are all the US companies. So for those that have been investing for a while, especially in 2023, we saw that companies such as Apple, Microsoft, Amazon, Nvidia, Meta platforms, they performed better. ExxonMobil did not have a good year, but most of these top 10 holdings, they did perform well, and they led the S&P 500 high. So in terms of the holdings, you can see that it is more geared towards the US. And then again, remember they said that the underlying fund does not distribute. We can also see that in the previous 12 months, they haven't made any distribution. So this is going to be a similar theme with all the ETFs that are tracking this iShares Core MSCI World ETF there. Okay, now moving forward, maybe let's focus on the other one that also does not pay a distribution, which is the Satrix one, because it also tracks the same product as the OneVest product. So this is the underlying fund. They track the same underlying fund. You can also see the top 10 holdings. It is the same holdings as the one from OneVest. And then there will be other things that we want us to focus on. Again, the total expense ratio is 0.35%, so it is 0.05% cheaper than the OneVest. There is no distribution. And then the allocation, you can see now they broke it down in terms of the sector, how where it is invested. But in terms of countries, it is the similar. Okay, they don't show where it is invested in terms of global location, but you can see the top 10 holdings. These are the US companies. So it is the same thing as the OneVest. Okay, now let us look at a different one. Let us first check that it distributes. So this one is coming from Coreshares, and then they track a different underlying fund. So the fund that they are tracking is the FTSE Global All Cap Index, which covers both well-established and developing markets, right? So this one is a bit different than the one that we were looking at, right? And then for them to be able to achieve the investment objective, and then they also like to take interest in the Vanguard Total World ETF. We had a video where we were talking about the Vanguard ETF that you can buy in order to invest, particularly for the long term. And also, if you look at the top 10 holdings there, you can see that there is a bit of a difference. This one also includes Berkshire Hathaway, which is the Warren Buffett investing company, and it also includes Eli Lilly, which is a healthcare company. Even the holdings are different from the one that we saw with the other two ETFs. And then obviously it is worth mentioning that they do distribute. They distribute biannually in March and in September. And then you can see that the previous 12 months distribution was about 18.37 cents per unit. So the price of a unit will change from time to time. This one, the fact sheet that we're looking at, was published on the 30th of September 2023. And at that time, the ETF was 12 rand 57 cents. Obviously, the markets are changing. It trades daily, so the net asset value is going to fluctuate a lot, which will also change the dividend yield of that particular ETF, right? So that is something. So now at least you know, you have an idea which world tracking ETFs distribute and which world tracking ETFs that do not contribute. Let's see if they mention where the money is invested. Okay, we can see in terms of the sector, IT is leading because we saw there's a lot of tech company, but we saw that there's Eli Lilly, so there's healthcare sector that is also included there. There's energy. Energy includes, among other companies, ExxonMobil, Chevron. Those are some of the companies that are in there. And then there's a spread in terms of asset allocation. You can see the difference between this ETF and the One Vest and the Satrix. Here they also included about 3% of property, whereas the other ETFs, they were just 99% equity with a small fraction that was allocated in cash. So this is just a minor difference between these two ETFs. Other than that, they do distribute. And then again, 61% is invested in the US, and then there's a lot that is invested in other developed countries, with 20% classified as either. So we don't know where it is invested, but we know that it's a global tracking ETF that does distribute. And then lastly, the one that we're gonna be looking at is the Sygnia S&P, not Sygnia S&P 500, the Sygnia World Index ETF. So the first thing that we just see is that they distribute biannually, December and June. So the previous distributions for January and July 2023 was between 20 and 32 cents there. So it's nice to see that they do distribute. You can see that the dividend distribution, it happens semi-annual. And then in terms of the net asset value, this one cost around 54 rand 11 cents. But then again, this was also published on the 30th of September. So we're gonna see, once they publish one for December 2023, how the things will have changed there. Okay, so now let's see what other information, useful information that we can look at. So we can see the geographical allocation. The United States, again, it's leading with about 19% invested in other parts of the world. The tech sector, okay, it's not the tech sector, there's the tech sector, in terms of the majority holding, it's 21%, because the 28% of the other is spread across different kinds of sectors. So the major sector is IT, financials, healthcare, and then there are other sectors that it is tracking. And then again, looking at the holdings, you know, Apple, we're always going to expect Apple to be there, but there's also this ExxonMobil, which did not perform well in 2023. We will see how it is going to perform in 2024. And then there's other big companies like Microsoft, Amazon, Nvidia, Alphabet, Tesla. We can see all those companies that are clubbed in together there. And then lastly, we can look at the historical performance, because they spoke about that historical performance. So for a long-term investment, it is not worth it that much to look on a month-to-month performance, but rather to look on an annual performance. So we can see in 2020 it returned about 20%, but in 2022 there was a drawdown of 14%, and then again in 2023. But remember, here it's up to September, so there are 3 missing months. We know the S&P 500 returned about 24 or 25%, but this ETF on those 9 months of 2023, it returned 21.4%. I wouldn't be surprised if the December fact sheet, it comes as 25%, but you can see that the money is growing, and they also have a nice graph that illustrates that growth, or the how your investment will have grown from the beginning of that ETF. So it started in 30 April 2008. So 100 Rand would have seen a bit of a drawdown up until somewhere in 2012, and then you would have started to break even and making money, and taking you all the way to just about 473 Rand. That is based on 100 Rand investment. So you would have seen your investment grow about 4.7 times, but over this long investment period. Remember, past performance is not indicative of the future, so we don't know how things are going to change in future. So what else is missing? Maybe we can look at the performance of these different ETFs over the last 5 years. So we're going to be looking at the chart dating back from around 2019 coming to 2024. We are in 2024. If you haven't used TradingView, we have a video where we show you how to use TradingView. We have TradingView tutorials, and we will leave a link to that video in the description, but also check at the top of the video there. You can click and then you can watch that video. So here we are looking at the Satrix MSCI World Feeder Fund. So we want to compare it to this One Vest. So I'm coming here to just to steal the JSE share code so that it can make it easy for me to edit. So if you click here, you can add a symbol that you want to compare with. So we are looking at the ETF world that is coming from the one vest. So if you add it, it's going to look like a line. You see, the one that is the candlestick is the Satrix, but the one that is having this line is the one that you are comparing it with. In this case, it's the one vest. And then we also want to look at Sygnia world ETF. And then lastly, we're gonna add the one that is coming from, we already have Satrix, so we're gonna add the one from Coreshares. The share code is written global. I hope that that will take us to that specific ETF. Okay, so there it is. It's coming from the 10 times, but this used to be called Coreshares, or it's called Coreshares. It's just that they're using different names. So you see, it's Coreshares by 10 times because there was a transaction between these two companies. Not sure whether it was in 2022 or 2023. Okay, so now we can see all of them. The global one from 10 times, it only started to be available around May 2021, so it does not have a 5-year historical period. But as you can see, in terms of how each of these ETFs perform, they all perform similar. So with this one, the ETF world, it seems like it is outperforming all of them just from the same starting date. As you can see, it is up by 138% in comparison to the Satrix. The Satrix is up just by about 119%. And then if you compare the Sygnia and the Satrix, they also have the same kind of performance. And then at the bottom, at around 34%, is the one from Coreshares. But remember, now we are not comparing apples to apples. Maybe if we zoom into the point where they started trading, which was around, let's see, it was around May 2021. So we're gonna try to zoom back to May 2021 so that we can see all three of them. So now we have the same picture. If you just go back by a few, you can see now they start to perform similar, although the global it's also about 34%, and then the leader there at the top at 48%, it's still the ETF world. So now it is a decision that you have to make for yourself, which of these global tracking ETFs you will prefer to have in your portfolio, taking everything into consideration: the availability of the ETF itself, the total expense ratio, and whether you want an ETF that distributes or that does not distribute. There's nothing wrong holding an ETF that does not distribute, but remember, for EasyEquites investors, that means that there's no screenshots for you to show us those beautiful distributions that you get from your investments. So that's it for today. That's all that I wanted to share with you. Again, if you haven't subscribed, please consider subscribing. And if you found a value in this video, please make sure that you smash that like button. Any questions, comments, or suggestions, leave them in the comment section. We will see you in the next video.